Hi everyone and welcome to another episode of Quick Take. Today we are still in the Americas and having a look at Canopy Growth Corporation. Now this particular stock is actually listed on the Toronto Stock Exchange and the NASDAQ. So if you go to investing.com and look at it, you actually see it on a NASDAQ, but all the information is actually under the Toronto exchange listing. So that's why I'm on the weed, the ticker here instead of CGC. Anyways, that's just to explain why I'm doing a stock on the Toronto exchange. But really, if you have a broker that does international, trading, you can probably buy this in Canadian dollars. Anyways, all right. So Canopy Growth Corporation is a cannabis company. I talked about this in my special report today on the early bird, and I thought, you know what, I'm going to do a quick take on it and see if there's any trading opportunities here. So pretty much it's a marijuana company. It produce and sell marijuana for recreational market in Canada. So it has some core brands here, Tweed and Bedrockin. I don't know much about these particular products, but it's cannabis and it's very hot in the market again. It was very hot before, it fizzled out and it's coming back. So yes, so that's a little bit about company. Let's move on to the financial. Now, it is a speculative company, so I'm not expecting much from looking at the financial. So I'm going to breeze through it real quick. So no PE ratio expected. I'm not expecting it to make any money at the moment. Okay, so quick ratio is 5.1, which is surprising. That's 5 years worth of cash right there sitting around. So let's move on, really. So cash flow statement, again, expected. We're not, it's most likely be losing money. It's a new company in an emerging market, so it has to find its footing first. The industry has to kind of establish for it to start making money, because at the moment, there could be regulation, a small amount of people know about the product, so it's running at the loss, and it's you got to put in context that this particular company is in an emerging industry. So yeah, look, I'm just going through the motion at the moment. I think what we'll be interested in is actually the chart, but let's just have a quick look at this anyway. So just to get an idea. Financing activities, paying back debt. I'll probably prefer that it's borrow some money. It could be maybe some debt that is due to just pay back. It's very small amount in comparison to other companies, but maybe it's a big amount for this particular company. So like I said, preferably see it borrow some money at the moment. I guess that's we wonder why it's just paying back debt, because this is like a net position. It could be paying back debt and borrow some more money at the same time. So yeah, because of the low interest rate environment we are in. Okay, so balance sheet. Let me see, I'm just interested in the inventory. So the inventory has grown. So that could mean that it's expecting to be selling that. So let's have a look at the so inventory has grown by what? 391 divided by 190 is 2 times, right? So let's leave that there, and let's quickly jump over to the revenue and see how much that. So the revenue kind of like lags just a little bit, but it's not by much. But it's good that revenue is going up, so the company is expecting that it could sell more. So we just have to find out. Like I said in my special report today on the early bird, is that the CEO of Canopy Growth is expecting it to be profitable by 2022. So we'll find out. So that's next year. Liabilities, liabilities kind of stay around the same mark as last year. That's fine. Total liabilities, yeah, a little bit higher, but not too much. So that's good. All right. So income statement. So we briefly look at that. So that's gone up, which is good, but the net profit is down by a lot. So let's just quickly find out why it's down so much. So operating income has grown a lot. It could be expanding its operation, so it needs a lot of money to kind of start ramping up its operation. So yeah, so we want to look at this in probably the annual report just to find out. All right, enough of this, because it's so speculative. Looking at this, it really give us very little details into the company. I mean, it's great to see revenues going up, inventory is going up. I hope in expectation of more sales. So because we are looking at the Canadian at the Toronto Stock Exchange, so I'm using the Toronto Stock Exchange with an overlay of the NASDAQ. So the NASDAQ one is this one right here, the one, the orange one. So it's one of the great thing about TradingView that you can overlay graphs and stuff. So this is really good. So you can see it's pretty much follow the same kind of price action as the Toronto the WE ticker one. So I've drew out the all the lines. So we got a resistance here at this top part, oh, what's happening? No, yeah. Sorry, I always press. There we go. Let's go back to it. All right, excuse me, and let's go back to that. All right, cool. So yeah, so it's on open. It's gonna open at this level here, $53 something. So it's gonna test this resistance at 55 US dollars and 70 Canadian dollars. So I'm gonna talk about this, the Canadian dollars from here. When I say dollars, it's gonna I'm referring to the Canadian dollars. All right, so it's gonna test the $70 mark, and I reckon that it will. And then probably do a fake out, probably even get to this point here at the 76 mark. So there's for any of you who momentum trade, I reckon there's gonna be opportunity for you. And with that kind of news, I reckon it's gonna break through. But at the same time, I believe a retracement gonna happen for it to kind of fizzle out. And you can see from the volume is that there's high expectation. So the big institutional buyers are coming in. So that's a huge spike in volume right there. So that's something to keep in mind. So what I expect to happen today is that it's gonna shoot up to probably around this level, test that. And the day after, it most likely gonna test the $75 mark, and then it's gonna come down to the 62. Now, so if it does, if it shows a big spike in volume today, I might come in towards the end of the trading session in anticipation for the spike up there. But this is gonna be minimal. It's gonna be a quick in, quick out, and then I will take my principal out and wait for it to dip, and then see where it starts to retrace. I hope it will retrace to this level, and because it's once it passed this point, this could be the support right here at the $70 mark. And if it retraces down here, which I expect it to, just because it would be too hot, and we can have a look at the RSI, so showing that it's definitely being overbought. We don't really need to look at this because we know that it's losing money. And you can see the MACD. If you bought down here, there's a buy signal there. But from the look of it, let me see. There's a buy signal here. So that's a really bad buy signal. So it's not consistent in terms of like where the buy signals are. Here's another buy signal, air quotes. But it just keep going down. So it's not reliable. The MACD for this one is not that reliable. Anyway, so what I expect is that it's hits up here, go back down, retrace a little bit for a few more days, and then they'll come back up to retest it, doing like that. So it's definitely forming a really wide cup. So it's a really nice wide cup. That's something that it's really good to see. And with the volume, it's just spelling a really a standard cup and handle formation, but at the moment it's just a cup formation. So I'm waiting for that handle formation, another spike in volume on the handle formation, and then I'll jump in and and then see where it goes from there. Now it is quite speculative in my opinion, so I would trade this one with a lot of caution. I wouldn't go all in. What I would actually do if I FOMO out, I put a minimum in now, but I probably want to wait until the next day, towards the end of the session today. So yeah, I would put in a minimum. So if it does come down, I'm not losing a lot, and if it does come down, I'm gonna wait for the handle formation. If the handle formation, if it drops down below the 0.5 mark, I'm just gonna let the initial investment initial principle just sit there, because if it drops down, I think if it drops below this particular spot, the 61.8% retracement mark, it's gonna take a little bit more time to come back up. So if it drops to here at the 78.6 mark and then come back up, and that's a good sign. I'm also watching the volume of that kind of movement there. It may not form a handle and shoot straight up, and that's totally fine. So that's why I'm kind of like, do I go in, risk $500 and that's the minimum, and possibly have a really good gain. Otherwise, yeah. So it is definitely worth looking at very, very closely here. So it's very exciting for those who momentum trade. I do a little bit of time, but I just try to keep on the investing side of the equation. But that's pretty much it for today. I will be watching this one quite closely, and I probably will update again tomorrow on this particular one, and possibly on Tilray. And that's because I think there's some really nice opportunities happening right now with all that big news coming out. So that's pretty much it for today's episode of Quick Take. Hope everyone stays safe from the coronavirus and stay safe from the market. Trade only what you can afford to lose. Now, if you like what you see, please share, like, and subscribe to support the channel, because I will be doing a video every day, a quick take video every day, and a early bird video every day. So hit the subscribe button so you can stay up to date to that. If you have any thoughts on what's happening here, please leave that in the comment, and I'll see you next time on the next episode. Take care. Bye bye.